All right, this is Bruce for Ola Prime, taking a look at a few assets from a technical perspective. And today I want to look primarily at the weekly chart because they seem to tell the story pretty well, starting with gold. So we have these two rising parallel channels in gold, one the dash lines and one this nearer term full lines here. And you can see that resistance was seen near the top of the channel lines, along with some Fibonacci levels. And then we have this potentially bearish shooting star candlestick pattern that formed this week at right off that potential resistance zone where we might expect resistance. Okay, so that means that a drop below today's low, or this week's low, I'm sorry, 3016 is what I have on my chart, will likely lead to a deeper correction, certainly a test of this internal trend line here, and maybe down at least to the 61.8% retracement, combined with a larger 38% retracement, and this previous resistance becomes support. So that zone is around 2,961 to 2,944 or so. And if price keeps falling, which would mean that this trend line was broken, which is going to happen at some time, given the angle of ascent of that trend. The question is, when is it going to come down, find support, and then continue higher? That remains to be seen. Okay, moving on to the New Zealand dollar, which I've been looking at a couple times this week for the parallel trend channel, but now that parallel trend channel, as you can see, is a bear flag, and there was a breakdown on the weekly chart of that bear flag. I think it was today, probably when the trigger happened, and with a weak closing price in the lower half of the day's trading range, and maybe in the lower third of the day's trading range, and it is an outside week, so you can see that the whole range here went all the way to the top of this area and then all the way through the bottom as well. So this is a clear reversal by itself on the daily, and then it's a breakdown of the weekly bear flag pattern. Moving on to the S&P 500, the weekly again, you can see that the week ended near the lows, and there was a break of this trend line here that opens up the door to lower prices. The next zone, it looks like S&P is targeting is around 4,970 or so, 4,950, maybe all the way down to 4,884, which is a 61.8% retracement of the trend beginning from this swing low right there. But given the way it's coming down, it's heading right for this next target. That target is also the 127% extension of this ABCD pattern. So the CD leg is 127.2% of the price depreciation seen in the first swing down. And then finally, we have crude oil, which has broken below significant long-term support zone and is testing lower levels. This particularly this swing low right here, and you see this is back in August 2021. So this week's low went below that. So this week hit a low that we haven't seen since before August 2021. This could lead to a bounce, but I've got a some lower targets here. In particular, we've got the ABCD pattern finishing down here at 58.94. We do have one completion here at this week's low, which also correlates with this low and this low. Um, but that is the 127% extension of this retracement of from this rally. And then we have a cluster of zones down here around 57 going down to 54 and a half or so. So this looks like the more solid support zone given the analysis I've done so far on this. But either way, bounces are likely to be used by traders and investors as an opportunity to take advantage of further selling. And since the sell-off was pretty sharp, the counter trend rally in the meantime could be pretty sharp as well, back up to test potential resistance at prior support areas. All right, that is it for today. Traders, have a great weekend.